So let's see here. All right. So here's what we're gonna do. Today on the simulator is Wednesday. Hello everybody. Let's turn this down for a little bit first and foremost. So let's allow the simulator to start in a moment. And in a moment, we're going to be able to take a look into the higher time frames and lower time frames and just see kind of where price is at right now and where price wants to go. We will be trading support and resistance today. Alright, so let's see kind of where we're at as a whole. So where we're at as a whole right now is just, let's see here, price is on this downtrend as a whole. So what has happened most recently, we're in 2016, so in 2016, this whole year, prices just kind of just been going downwards on a downwards, how do you say, movement. It's at 1.4 right now. So let's zoom in. We can see some stuff right here, you know, prices, sorry, bear with me. Trendline properties. I just want this to be black. Hello there. Good morning, everybody. Good morning. So right here, price is looking to price is an uptrend, and price really looks like it's looking like it just wants to continue bullish, maybe to break this trend within the next couple days. So that's what we're going to see on the simulator. Let's kind of zoom in. Let's zoom in, and we can see here price. The most recent candle was how do you say, a bear candle, but it's in bullish momentum. So my bias would be bullish to continue upwards. So let's kind of now pan out some supports and resistance. So we have support here, right here. That's some support. So let's see what that looks like on the lower time frames. So that's like a level of support right here. Our analysis is bias. Our bias is that price is going to continue in a bullish trend. So let's see what else kind of is in the horizon in terms of support and resistance. We have some support right there. That's the most recent level of support. We have some resistance right here. Price is trying to break out of it. And if price does, I can see price, you know, continuing to the top of this ridge here. So let's zoom in again. All right. So we're at 6:15 here, Eastern Standard Time. So we're gonna see what these levels of support look like. Right here is a level of support, right? And then this is the level of resistance I was just referring to. So right there, level of resistance. And if price breaks above this level of resistance, so if we zoom in here, let's get a better look at this. So on the 1 hour, if price breaks above this level of resistance, I can see it actually going upwards to around this area, let's say, and we're going to be using a bit of bigger lot sizes just to, you know, test some things out. So it'll be fun. Use like dollar lot sizes. Okay, so right here we can see that price is creating some candles to reject this area. So it's creating some, how do you say, bearish candles. So if we pan out some level of support here, we can see here if we look to the very left that there's price action here. And this price action also corresponds with this level. We have clear candle here to the left. So what we're going to do is we're going to zoom in again, and we're going to see what this kind of looks like on the 30-minute. So let's zoom in on the 30-minute, and it was this exact area right here. So that's a level of support right there. And then price, if it breaks through that, can go to around this area, right? Now we're in pre-New York, so we have to think whether or not we're going to go impulsive or if we're going to wait for candles to close. What kind of area is this? This is about 30 pips. That's nice. That's a very nice range. So we also have this level of resistance here. We have to like pan it on such a way that it's like price is reacting to this area. So sometimes what we can do is we can just zoom out. Let's forget about that for a second. So right here, price is reacting in such a way to this area, but we don't want to automatically take a trade right now because we're still in this zone. So we want to find out what the zone looks like exactly. So right here we have this level of consolidation here to the left, and let's zoom in. We also, to be 100% honest, have this right here, which is very, very, very relevant. So I'll just go over both of these levels of resistance right now. So in one level of resistance, we have the most recent price action. So price reacted to it, came, and now we're coming to this area, and we're between these two price actions. So when it comes to these candles right here, we can also see that there was a huge wick here. Price came down. There was a level of resistance created by these candles, and price had huge wick candle, price action. So coming here again, price also did the same thing, except it created this level of resistance, and it's been respecting this level of resistance. So I think if we do get some form of a candle, you know, like printing in between here, then if we get some form of a candle printing in between, like let me just draw it out, like here, let's say, right? Then I can definitely say that the next candle would look something like that, right? So that's what I would be looking for. Again, when we go to the higher time frames, when we look at it, we are in some form of a level of support here, very strong. Price closed here and went automatically up. So we might just be looking to wick down, but we don't know that yet. We're looking to see what we can get in these areas. So 4 hour, 1 hour, 30-minute. So again, if I was to talk about the 1 hour, the 1 hour is very good to look at right now, because when you look at it, you can see some form of rejection here in this area. So in this area, there's no candles. There is this candle, but it also kind of corresponds with this exact area. So in this area-ish, you can say that if price comes into this area, then a trade can be opened as per a bull trade. So now when we dial that back, just delete this real quick. Delete. So when we now dial that back to the 30-minute, let me just delete this real quick. Delete. When we dial that back to the 30-minute, this becomes this on the 1 hour. So as you can see on the 1 hour, we don't have that panned out. It's a level of resistance. It kind of is like this, but like if you were to like do that on the minute 30, it's basically this right here. So you can just take this and just now move it to an area that you think would be take profit, which would be around maybe that area, which is about 20 pips, which is good. Because if you look to the left again, We're about to get a new 1 hour, so that's very relevant because we're going into 7 a.m. So if you look to the left, like price action, it went through this area very smoothly, but there was also this level of support created before price just slashed down. So this might be a take profit area. So right here, what I'm thinking is I'm gonna go strong on these positions, but we're gonna have like very small take profits and stop losses. So if I'm wondering if price breaks this area right here, that area right there. Oops. Will it go all the way through that area? So we can have a text box and just say buys above here, right? Oh no, that was object legal priorities, control C. Sorry. So we got buys above here. We got our take profit. I'm pretty sure price is gonna go with momentum. So we're gonna see. We are really going to see what's gonna happen. So right now we have this hourly candle close as a bull candle. So the next one could just break the top and continue upwards. There is that candle there. Let's see if we can catch this trade. I'm going to take a buy, and it's going to be an impulse move. So we're going to have to slow this down to slow that down, and we have to manage risk appropriately. So right now we are in 3 pips of drawdown. I can actually speed this up. 4 pips of drawdown. So just as per a basic rule, like 4 or 5 pips of drawdown, you kind of want to close 50%. So you get out your button here and you say, I'm going to close 50% if it goes to a certain point. So that is a possibility. Right now we are trending. We are going back to break even. Let's see if we can break the tops of these and keep going. Okay, we are breaking the tops and we may keep going. Gonna manage risk here appropriately. Okay, so right here I'm gonna close partial. I'm gonna close 50% and another 50%. So in total I close 75%, and then I'm gonna move my stop loss to break even. And is my stop loss at break even? I think so. Auto. Yes. So my stop loss is at break even. So the rest of it is just running right there. We just took about a partial position. So we took, how much did we take in that? Took a total profit of $57 right there. Okay. So next time what I can try to do is I can try to take the take profit off and then move the take profit to about 15 pips, something like that, right? So right here, we're just going to take the take profit off, put the take profit to about this level right here, which is about 30 pips away. 30 pips away. Let's see here. Pips from entry 30. And we're going to let that just run. That will just run. That will do the work for us. So right there, successful buy trade. It was based on momentum, really, and my bias was to how do you say? To be honest, my bias was bullish because we've just been trending bullish, and even though we had this candle print as a bear candle, all in all, like on all cylinders, we were trending in a how do you say, bearish manner. So right here, we'll probably hit our stop loss very soon, which I don't mind. That's a stress-free trade. The next one, because this one, what I can do as well is what I can do as well, and what I was thinking is this was an impulse move, so it was very impulsive. What I can do as well is my stop loss can be below the previous candle. So we're opening about here. So it's about like 20 pips away. So right there, my trade was stopped out, totally fine. Um, we did make some profit, total of $57. So we're gonna look at another trade soon. I'm probably just gonna go to the next day. I'm gonna see how the rest of this day pans out, just to learn from this day. But that was a successful trade. Now we're just gonna sit on our hands and wait to see what is gonna happen next. Realistically though, I'm gonna speed this up to about 11. So that trade was just really based on momentum and taking a I knew there would be momentum in pre-New York, so I took that trade based on pre-New York momentum. It panned out the way that I wanted it to, in the sense that, sorry, in the sense that it was really impulsive. You know, this candle really didn't break above anything at all. It really just closed bullish. I had a bias in mind, bullish. We had a retracement, and it just continued going bullish for a certain amount of time. Total, it was about 12 pips, 13 pips. So realistically, what I can do is keep my stop loss about the same, maybe even like 12 to start, right? And then move my take profit up to like 15. And that's kind of maybe the area that I'll work with. But still at 5 pips, I still want to close 50%. When I get to around 5 pips loss, I want to close 50% of said trade. And when that happens, I'm just doing good risk management. So right now we're just waiting and just seeing what's happening. Um, so right here, as price just totally breaks through all of this, totally just smashes through all of this. I actually just wanted to speak on this. So my stop loss would have been below this area, and then I would have moved it every so often. So when I go to the 15-minute candle and we zoom in, we can actually see that in that area, let me just zoom into that area. So when we draw out the level of resistance that we just had, yeah, we can just see that price just looked like it wanted to just smash through that area. So it did, and now it's retracing. I took my profit and my trade was done. So going back to also what I was referring to about these two levels of resistance, and which one I would more so want to have there as a level of resistance. It was this one that was the particular one, and it did pan out to be that it would just break this top and then continue. So the reason, and the main reason why I had that level of resistance was because if you look at the candles, this candle closed in such a way that resistance would be, how do you say, okay, so this is where that candle is, right? The price is 34 and this price is 34, 54, but then if I move it to the center, yeah, so approximately in the same range. So this candle closed in that area as opposed to closing in this area. This area is a bit higher. So now if you look, the candle on the 30-minute like price on the 30-minute candle, it just closed right in that area and then zoom down. So I have to actually keep that in mind to look at the, I have to keep it in mind to look at the 1 hour candle, the higher time frames, to help facilitate where my levels of support and resistance are definitely going to be. Candle closes because that's where it came back and closed at. Wicks being left, yes, okay. And all this data is very, very relevant because as you can notice, as soon as that happened, like I played my bias out and it played out. It played out for about you know, like a total of 26 pips, and that was my bias at that time frame. So after that, if price closes in a different way, then I can see it going there, because this could be a wick on the higher time frames, and now price could just want to plummet, right? So that's also a possibility or a plausibility. See, it's now breaking the lows of the other candles, so it may just want to, as an impulse entry, just go ahead and just really push down. I personally don't have to take any trades here, but a paper trade here as an impulse entry, that's already at as it how do you say, breaks these lows here, these candle lows, you can just clearly see that this was like another perfect level of support, and that can assist in your bias towards where price wants to go. You don't want to take trades here because price can just be retracing to go at this level of support to just shoot up. You necessarily don't even want to take trades here because it's the same thing, but below this area where there's no level of support whatsoever, it actually just shot down, and past that point it went 15 pips. You can catch like at least 8 to 12. 8 to 12 is nice, right? I already caught my trade for the day. This is actually New York Open, right before New York Open. So this can be right before New York Open, 7 a.m. Huge momentum. Oh, huge. So probably another Eastern Standard Time, probably 24 minutes till I go to the next day. But it was just really interesting to know. It's really interesting to know that you can draw out supports and resistance to the exact T based on the higher time frames, right? And I actually got a winning trade here, took some of my profits and got out. I could have just let it run, but it's always good to take profits on a winning trade. That's what I have to instill in my trading. Is, you know, when you get to like 10 pips, take 50%. So I could have let it run more, but at the same time, you know, it is what it is. We just have to go day by day. Also, it's Wednesday, so there's a lot of momentum, and I'm not saying to take multiple trades, but there could be, how do you say, a lot more momentum, a lot more opportunities than a Monday or Tuesday or Friday, right? Or a Monday or Friday, let's say, to be more specific. Tuesday has volume, Wednesday has volume, Thursday has volume. Those days definitely have volume. definitely have volume. So we're just simulator trading here on a Sunday. Just a really chill day. Have work tomorrow, and then basically the week off, which is nice. So nice. So right here, I'm just gonna see how this day pans out. We're gonna go a 30-minute candle here and just see how this day would have panned out. We have basically a consolidation candle right there. You know, if you're here and you're thinking that you're gonna get a super nice buy, you got a consolidation candle. Let's see what happens next. Another consolidation candle. This is more than likely because we're reaching into NYSE Open. NYSE Open comes with a lot of volume, so if we click the next one, right there, you can see it burst above all these candles. You take a buy, you catch 30 candles, you catch 30 pips, right? So that's the NYSE Open. NYSE Open is the New York Stock Exchange Open. That's when, you know, stocks, people are getting into stocks. So you'll see volume also going to Forex. So when we get to here, these areas are basically zones of consolidations. You will get price moving in such a way that it wants to go, and you can see it's kind of following such a manner that when you go to the higher time frames, it made sense for it to do that. It made sense for it to go all the way up, but it just didn't happen in our, how do you say, our time to trade, which is just how it goes sometimes. That's fine. So right here, what we're going to do is we're going to go to the next day. I'm going to just pause it here and get all my candles cleaned up. Basically on the, well, here I'll leave the daily because, you know, we want information to you know, remain the same, stay linked. Stay linked in such a way that, you know, we can make references to such information if need be. So okay, so what I meant by that exactly, and we're just gonna zoom out there and we're gonna play this. So this exact trend line was based on information that I drew based on candle closes, let's say, right? So when you take into account this candle specifically right here, it's now entering a zone where you can say, when you zoom out, that price is now looking to possibly buy. Because if you notice now, it's price has made a lower low, a lower high, a lower low, lower high, lower low, and then it made another lower high, and then this particular set of information right here is basically telling me that now when it's making this particular lower low and then a lower high, we want price to subsequently break this lower low to continue in a downtrend, right? Continue in this downtrend that it's been going in, right? Since about 2014, right? So right now, price is this lower low, because now we're breaking the top of this particular candle right here. This particular this lower high is now starting a higher high. So now we have a higher high than these ones. So we have a higher high followed by a higher low, a higher high, and now price here, when it makes this higher low, it got respected by the previous lower low, the most recent lower low. So now we have to zoom in, and now when we look at the candle, when we look at the trend line that we drew for yesterday, which was only yesterday, we can see here price, and I was actually going to go over this. You don't want to necessarily trade in this area because this whole area is not information that you know of. We don't know if price is going to continue upwards and continue to shoot up, or if it's going to just now shoot down, right? So we have to allow price to tell us that. So maybe this would be a skip day, or rather than a skip day, just use like lower lots, like super small lots, right? So there is still information to be learned in this. However, you basically want price to, one, tell you that, and two, most importantly, because we don't know what's going to happen exactly, we want to take our time. We want to just really take our time. And one of the things with risk management is that you can have really good risk management, and it doesn't have to be with closing 50% or adding lots on after you close 50%. It can just be based on, hey, let me take a trade at a lower lot size where if I lose money like $10, I haven't really lost anything because the previous day I made, let's say, $100 or $60 or $70. Or let's trade with not even a 10-cent lot, trade with a 5-cent lot where if I lose $5, it's nothing to me. I can still practice that kind of thing, right? So the whole rant is to say, in certain areas we don't necessarily know what price is going to do. There's no way to predict 100% what price is going to do. We can only go based off of economics, like the news, stuff like that, and the direction of where it's already been going, like big sharks, big whales, and let price tell us that. So while I've been talking about that very important aspect, because in also winning trades, it's also very important to have risk management. You want to have very good risk management, very good discipline, that kind of thing, very good psychologics, as well as winning trades, right? So winning trades and technicals and fundamentals, those are 2 out of the 3 parts of the puzzle that you need. The third one is a psychological aspect of your trading: discipline, not over trading, making sure that you're sticking to your plan, making sure that you have goals. One of the things that I would say too is if it's not working in terms of winning trades and fundamentals and technicals and psychology, and you still want to trade, and you still see people winning and trading, and you're like, I can do this, and you have won a couple trades, then just don't deposit it into your account. Just save an extra $4,000 and then put that into your account. In doing so, you're still going to trade in the meantime while you save that extra $4,000, but you're going to trade with like $200, $500, $1,000, or on a demo account. Use the simulator. Just keep watching people win, and then come back to it. Put in like 50% of what you just saved. Put in like 50% of that $4,000, and then test out your strategy for about 3 months, and tell yourself, hey, can I make with this $2,000 an extra like $500 or $700, $800, $1,000, like whatever you want to make on top of that $2,000 in 3 months? Just say, can I make that? And then if you do make that, then add the extra $2,000 on top of that. Now you have a total of like $4,500 or $4,600 or $4,700 in your account, as opposed to just $2,000. And all you did was just save money. You saved money, and now you're just testing a strategy. So that's definitely a noteworthy statement. So we had a trade just pan out here. It was a pretty smooth trade too. I mean to say, there was a level of support here created. I think that was the trade that I would be looking for in this manner. But again, it's really everything is just, when you go to the higher time frames and you see certain stuff pan out, you just want to avoid that trading day. Right? So all this, look at this, it's just up, down, up, down, up, down, up, down, down. There's no telling if price just didn't do the same thing, right? That's what happens in areas of consolidation. The only thing you can say though is that like there is this clean candle right here to the left. It's very clean. It's right before all this mess. It's like right here, right? So if price shoots below here, you can possibly open up a sell. We have pre-New York momentum, very nice momentum. I mean, let's do this. Because we have all this mess here at the top, we'll open up a paper trade if price shoots down below that. But okay, we have price about to shoot below here, so I'm gonna open up a paper trade. Maybe actually no, I'm not gonna open up the paper trade, even though I want to. It's gonna be that I'm gonna be disciplined. because we have a new. Ooh, that was so nice. Look at this. Oh my gosh, I know. Oh, okay. So we have a brand new 1 hour candle coming in about 10 minutes on the simulator. So wow, price is just moving through this very nicely. So you see what I'm saying? We don't know if price is gonna just shoot to the top or just keep going to the bottom. So this is the day that if you don't know what's gonna happen, you just want to stay away from it or just have lower lower risk associated with that, right? So instead of a dollar, you just put like just put just put 0.5, right? Whereby you're still sticking to the same principles, but now your trade is so small. Like if I lose 10 pips, I only lose $5. Let's see, about 30 pips. So yeah, about 30 pips. Okay. So if I win this trade, I win about $15. If I lose this trade, I lose about $5. If I take it, I'm not even in it. I'm not in anything right now. But I think also while this is just panning out, I think trading is so much easier with more amounts of money in your account. 'Cause I just feel like so many things are defeated at that point. Like so many. So I want to get to a point where I can just trade seamlessly. That's it. But yeah, no, when you have more money in your account, it takes away the greed. Because if you make a nice trade and you're going away with like in one day, if you make a dollar trade, I just made like $57 yesterday. That can be like someone's phone bill in one day. You know, like just take that out of the market, go pay your phone bill. You know, and then the next day your phone bill's already paid for, so you don't have to do anything at that point. Your phone bill's paid for. And then the next day, you get a huge trade and you use a dollar lot and you just leave the stop loss at break even and it runs 30 pips, $300. You take half that out, $150, you just put that in your savings, or you can buy groceries, save money from your paycheck, right? So what could possibly happen is price could be retracing right now to then create a candle that's gonna look something like this, possibly, right? So that's something that I'm anticipating, and then I'm seeing if it'll pan out or not. We'll see. We'll see. Price can also just be looking to now start to go up. So this could be like a candle. This could be like a wick on the higher time frames, on like that daily and the 4 hour, potentially. But we'll see. We will see. Minute 30, we have price breaking above this 30-minute high. In that case, like when you take trades, you're placing your stop loss above 30-minute candle, so your trade bias may be finished at that point in time for sells momentarily, right? So right here we have price didn't quite break the top. We have price retracing here. Yeah, so like I was saying, this could be like a no trade day. Oh, yo, this is actually moving quite fast, but it's okay. I mean, whatever. So that's moving fast. Oh man, 11. That's actually fast. But yeah, I kind of figured that this would be like a no trading day anyways. So okay, I'll tell you what. This trade below anything below like these closes here and these candles here is a good trade. So realistically, like you could have caught 50 pips in this. It would have been super impulsive, but like you could have. right? So that's something you just want to like maybe look at, that I'm gonna personally look at and see what can I do exactly next time that I'm gonna do, that I'm gonna look towards doing. Let me see here. All right, yeah. So this day was just really what I was referring to. Here, if you missed it, just go back about like 10, 15 minutes. You'll hear me ranting about this area here and why you shouldn't really trade here. The reason why here, I'll just talk about it really quickly one more time. When I zoom out, zoom out. The reason why is because I actually drew this trend line based on these candle closes and this most recent candle close, which was, let me just zoom in here. One of the most recent ones was, oh, actually, okay, so hold on. it was this candle close right here. This candle had closed, and this one was the one that was kind of forming and didn't form this yet, but it was forming it. So you have this area that now price had broken above and coming to this new area, above all of this other stuff, right here, right? So it came into this brand new area, so you don't really know what's going on. Zooming into the 4 hour, again, it broke above and instantly almost went right back down to this new area. As you can see, it plummeted. So we don't know whether or not price is going to just shoot up or just shoot down. In this particular case, however, price did break a level of support and shoot about 50 pips, right? So that's an opportunity possibly for the future. The simulator was going super fast, so I actually missed that. Maybe that was something I could have caught. But what I was also referencing was when you're doing so, I went from a $1 lot to a 5-cent lot. Huge difference in price. As well as just talked about that you want to have a good psyche, along with one of 3 things. So a good psyche is 1, winning trades is 2, and then technicals is fundamentals is 3, right? So when you're winning trades, you have to understand that there's also losing trades, and when it comes to losing trades, you want to manage your risk, right? You have to kind of expect it to be a loss. So when you get to like 5 pips loss, you want to close 50% of that trade. So I've been honestly just watching this trade. If this particular candle closes below all of this, I can expect the next one to wick up and then close in this area like this. So, you know, like around like 20 pips or so. So that's something I'm going to be looking for as a possibility. We will see. Oh, that looked like it was going to be nice. I mean, we still have like the New York Open coming in about like 20 minutes on the simulator, so I don't really like to trade before that. I like to trade with the New York Open momentum. So for instance, like if this particular trade like just pops up like right before New York Open and closes bear, but you're in a sell, like that is not good, you know? It's not good at all. So you want to just wait for that price to just show what it's going to do, especially near the New York Open. Like especially near the New York Open. Away from the New York Open, I mean, you're kind of fine. Like you'll get like more clear tell, but near the New York Open, you could tell you don't exactly know what's going to go on, so you have to wait. We don't have any news today at all. Today is a news-free day. Except for like 12:30, but aside from that, news free. All right, what's gonna take place in the next 20 minutes on a simulator? Let's see. Let's see. Yes, just waiting here. Alright, so let's see. So let's kind of dial it back to the higher time frames and just kind of see what's been happening, because at the same time, as much as it is good to look at the lower time frames and as much as it does get you into form, you also want to look at the higher time frames. That's what I like to do. I like to look at the higher time frames. So this looks like candles are printing side by side. So price in the market has not made up its mind as per where it wants to continue onwards, but I'm sure it will in the next 5 minutes on the simulator. I'm sure it will without a doubt. I think today for me is just a watch day, so it's going to be watching. Be watching. So right here we have the New York Open. New York Open is started bullish, which is good, because if it continues and breaks this low, then I could with confidence say that I can open up a sell, and it's gonna be at a low lot size. That's what I'm gonna look to practice right here. Look to practice right here. I can with confidence say that, but right now candles are just printing side by side, so it's quite hard to say exactly what price wants to do. No, we have to wait. We have to wait for this. We have to wait for this. So wait. I'm going to be waiting for that specifically. I'm gonna be heading to the gym soon. So I will be back to run the simulator some more. But in the meantime, I'm just watching candles print side by side. In my opinion, and in my trading day, if I just went and go back to the time, it's like 8:05. My trading day would be practically done, because I'm not really seeing anything going in my favor, you know. Like if I can say pretty confidently that I can see price going to at least the top of that candle, that most recent candle. But at the same time, we're now like entering a zone of, we're now creating a zone of consolidation. Price is printing side by side, and that is literally known as a zone of consolidation. So we don't know what's going to happen exactly. We have to wait probably for the NYSE, which I'm not gonna do. I'm gonna go to the gym soon. Guys.